Hello everybody, it's March 8th. This is the weekly review. It's going to be kind of short and sweet today. We had some retraces last week, as you can see here, particularly on Friday after the jobs number. We'll talk about that here in a few minutes. But I'm not going to spend quite as much time because I'm really busy with other things, but also because it, that promise of that last push did not unfold, which says that we're probably going to have to focus more on protection now than on reward. So when the market gives you what it gives you, you just have to react to it, and that's what it's given us. And let's pop into here and look at these things. In a quick review, the jobs number printed stronger. Expectations because of the weather was that it would be a little bit lighter. That got everybody excited about Fed, and Fed's going to raise rates. Fed will meet not next week but the week after. I'm almost certain they will remove that language for the patience. And when they do that, I suspect the market is going to struggle. And so this week, it appears to me that we're going to want to take profits in most of our positions that are trading positions, which is the majority of our portfolio. So that's kind of going to be the focus this week. That may be wrong, it may be right, it may be wrong in the sense that we may just head back up. But at the same time, when you make your run, you make your profits, you've got to book those profits if they potentially are going to get taken away. And, for better or for worse, that's the way it is. So let's go on here. The dollar soars, the bonds reel, and the markets sell down as a result. If I bring up the markets, the S&P 500 here, you can see that there's two or three things to note. So let's do each of them. And so the first thing here is that if we look at this, and let me get the right colored up here. If we look at this from before, if you remember, we had the big range, which was this range up here, and we're back inside of it now. The other piece of this is we actually had the smaller range inside of that, right? And we come right to it. And if you remember if you watch the TNT broadcast in the morning, I talked about this as being probably where this would pull back to if it broke up here, and that's what it did. So we've transitioned trend, we've transitioned on a number of these indexes. That's a problem. The fact that we didn't do a bullish retest regen is also a problem, right? That says that we're in some sort of a range trade again, and we just don't know where the bottom of the range is. So that bottom of the range may be here. We don't know that, but it could. It also could go deeper. Remember, this was the Fed bars back here, and remember we kind of had this range, and then we had the range up underneath it before. We're kind of back to this ideal of, okay, we've extended up. As a matter of fact, if we draw it equidistant, this thing went up and made the new high in that another range, almost the same size, sat up there, finally gave it up and comes back. So now we're back to test this prior range high. If this breaks, it's coming back down here again. Right? I would expect it's going to try to bounce here first and then potentially set up another move to the downside. And so when I look at this market and I think about what it's doing, the potential for this type of a setup is fairly high and bring us back into this top of the third and lowest range, right, and the middle or the bottom of the middle range. So to me, that's kind of the way this thing's trying to set up. That tells me that I want to take and book gains, and I want to get more safe. Now, it may be the case that this thing simply holds and goes right back up. But given that we didn't hold, and given that we're coming back like we are, at least on this index, it seems to suggest that that's not the case, and that we're probably going to see some more selling. If I go over and look at the NASDAQ, which has been the strongest, these typically, the strongest ones, will hold when they come back, which means that when we come back into this area, it's probably going to hold. But as you can see, that's quite a ways to go, right? It's 49.18 now, that high 48.14. So we could get another 100 points to the downside on the NASDAQ. On the NDX, it's not as bad. If we look at the NDX, that top is 43.22. We're at 43.99, so it's about 70 points here. And if we bring over the NDX, which is this is probably the most positive case, that is that if we come back to do a retest regen here and it holds the top part of this, then that's not going to be a fairly large number on the weekly. That high, 43.47, we're currently at 43.99, so it's only like 40 or 50 points down. But it could trade, because it's within 6 bars, most of the time they try to trade to the bottom. That's 42.58, which would bring us back to looking at this as the place, that you'd see the first hold on the daily versus the weekly. So, all in all, it just looks to me like we have more retracing to do. We could get a little bounce before that, but I suspect we're going to go deeper. And that tells me that we want to be careful and we want to move more into protection versus, aggressive trying to make money type of trades. Those unfulfilled targets are still in place, but they're questionable and they may get taken away here pretty soon. The S&P, that is back in a larger range like I talked about. Trends are turning, which I also talked about. The positives, the financials. The financials actually held up pretty well last week. And so if we take a look at that, if you look at this bar, you might not say that looks good, right? Because you had this big volume. But remember, you were pushing highs all morning Friday with that volume and then gave it up. The financials actually look like they will go back up and try to test into this area again. And the reason for it, fundamentally, is as rates go up, that helps the financials in terms of their bottom line, right? They're going to make more money. And so that's why they were getting the push up. But again, that's one sector out of all of them. It's an important sector, but we've got enough damage elsewhere that I don't think it's going to make a huge difference. And as I said at the top of the show here, the reason is the dollar, right? The dollar has taken off again. Let me put the weekly over. The dollar's taken off again. And this, we already know, was an issue in the first quarter, and it's going to be an issue for earnings again in the next quarter. ABCD structure more than finishes, right? Now it puts up another ABCD structure, and it's just starting to take off again. That's a real problem, right? If that continues, and it certainly looks like it will, that's an issue. That's going to put more pressure on the markets. And then if we flip over and look at the bonds, right? The bonds, I thought they were going to hold this area, but you can see volume expands, they crash up underneath it, right? They're doing an ABCD structure on the way down now. If we pull this over and bring in the ABCD here, you can see that structure is in place, and it's going to take it right down into the bottom of this area here, up underneath this. Maybe it will find support there. But that is a -2 in the short term. So, all in all, it just looks to me like we've got some damage out here. We're going to see more damage, and we need to be careful about what we do in the very near term. The fundamental positive, that's really European central banks now. The negatives, China's still struggling, and it can't seem to find that balance between growth and stimulus. It's shrinking. It's got a number of issues it's trying to deal with, and it's trying to do that through stimulus, but it just hasn't found a good mix yet. And that jobs number was a big negative on Friday. What to watch in the coming week, I think you have to look at those strong indexes as they come back on the weekly charts and potentially all the way on the dailies. I don't know that they're going to stop at the weeklies. They may be the dailies where they stop. Do the financials work higher or not? And I think that's going to be really, if we're going to get a push back up, it's going to be the financials trying to do it. On the upcoming economic highlights, earnings, there are no earnings really, it's economics, and there's really almost no news flow. If you look here, it's pretty light this week. You got the Fed next week. What that tells me is that everything you saw negative on Friday is going to continue to be negative this week, because there's not any news flow probably to change that. The bottom line on my view here is on a short-term basis, the potential for that final stretch was swept away, right? It's not there. It's just not going to happen. The result is that 3 of the 5 indexers are back in their ranges now, and you got to expect that these strong ones are the ones that are going to find support first, so that's where you want to look. It also means that on the downside, we're probably going to see some more of it. And I don't think, because of the news flow being negative on Friday, I think it's going to continue to look that way. On the portfolio, I didn't actually update all these notes this week. I'm really kind of pressed for time, and I don't think it's that valuable because I'm going to probably sell out a bunch of these. And so, and it's not that they're bad, it's just that I want to book gains. And so on the portfolio, I added XLV. We'll try to get a bounce there and make some money, and I want to sell out a lot of this other stuff that you see here on the charts. So where are we? Well, we've had a nice run. We made some money. We want to book those gains, and we want to basically get thin again and wait to see how this market reacts, and then try to buy some right at those lower price points as it comes back in. And what I'm talking about is on the NDX, on the S&P 5, on the S&P, but mainly on the indexes. As these come back in, we're going to want to watch this area here to do some buying, and probably do our buying potentially just in the sectors or the indexes mostly, to stay away from any kind of surprises as we get closer to earnings, and then also just to make a short-term trade with some of the cash that we'll have as a result of booking profits now. I know this is short and sweet, but I'm really busy, and I just want to get this out to you as I continue to work on other things. All right, well, thanks a lot. I appreciate it. Thanks for your patience with the issues that we had last week, and it will be a little while before all of the swing points and the trends accurately reflect on the daily charts in particular, because they take a long time to process. So just realize that if you're looking at it, the quotes are right, I believe, at this point, in almost all cases, but those updates happening there on the swing points and so forth are just starting to grind out, and it's going to take a little while to get those done, as I said in the notes I sent already yesterday. Appreciate it. Take care. Thanks.